Trading Market Technicals Morning Call video for Tuesday, July 23rd. Small green across the board on the indexes. Dow Jones up 1, Nasdaq up 12, S&P up 3.5, Russell up almost 3 points. One word to describe yesterday is boring. Terrible price action. We've literally just been creeping up, I don't know, I guess maybe about 20 days or so, give or take a couple of small days, and now we're just kind of consolidating again, which I think is actually quite bullish. But we are really in the heat of the summer trading, and it is boring. I got to tell you, it is boring. So really not much to go over in this video, but I do want to point out a couple of small things. Last night, Netflix reported, and they had a shortfall in their subscribers. Today we have Apple, very important, GE, and Caterpillar. Those are big components in the Dow, and that's something that we will be watching closely this morning. Could either push this market into new highs, or could easily revert back down and start selling off here. And I remember, earnings hasn't been really that good, so we just want to keep that in mind. And like I said before, if anything, patience is so key in this market. Take a step back. If there's nothing to do, I wouldn't be pushing, looking to do any type of aggressive trading, especially in this low volatility environment. All right, I'm going to run through these charts, guys. There's really not much going on. Remember, the big thing is going to be the earnings today from Apple, Caterpillar, and GE. All right, so we got the NYMO. NYMO is really not telling us anything other than they have much more room to run to the upside, and obviously tons of room to the downside before we can even get considered to be oversold. Okay, VIX. This is exactly what I've been speaking about for the last week or so. What I'm looking for is the VIX to start really breaking down here. The dollar start to sell off a little bit more and catch a bid. And then, of course, equity markets push to new highs one more time. And then we can actually get that little bit of a sell-off that we're looking for. And I think that would be a really good spot to get short, risk-reward-wise. So we're looking for this. I'm looking to actually get below the Bollinger Band here. Nice big engulfing candle like the last couple of days, one more time, maybe today, tomorrow, and really push lower. And then we will look to get into a short position in the market. Okay, now here's the dollar. So everything what we talked about so far is working out, right? We said, okay, I'm looking for more of the 81.5 to 82 area. 200-day continues to creep up here, so maybe another day or two of a sell-off here will catch this little consolidation area, maybe 81.75-ish. Let it settle in for another day or two, and then let's see if the dollar can revert back up again. Now, that dollar could just literally continue to just break down here, but that is what I'm anticipating. And before we even react to that, we need to have a trigger, obviously, and that will be when the dollar continues to now start to make a move higher. So we are breaking down a little bit, as you can see, and we are oversold in our stochastics. RSI not quite oversold on the dollar, but again, let's keep an eye on this. This is right now starting to happen of what we're looking for, okay? And when we have a weak dollar, you're going to have a little bit of a bid in commodities, and this is where I'm looking to short the golds right around the 1410, 1375, 1410-ish area. Again, when it gets there, we're going to need to see it roll over, obviously, and take out the previous day lows. That'll be the trigger, and to look to short the gold again. I think gold, as you can see here, clearly is in a downtrend. This is just a normal retracement. I think gold has further declines to come. And why? Well, if you have a good outlook in the economy, there's no reason to hold the metal, right? I mean, there's really no reason. Unless you get down to here, this is going to be the area for my short, but I would be a better buyer down here at anywhere between 1,000 and 1150. Okay, that's going to be the area where on this retracement back down, I think ultimately we take out this low and then go lower, and that's where you would start nibbling long for gold, and that's going to be the longer term play. Okay, now let's get into the charts. As you can see here, literally nothing has happened, right? We went all the way up, we had a little bit of a pullback, we climbed up again, and now we have literally been here for now 6 trading days, right? Well over a week, and we are just consolidating from the 167 to the 169. So we're a 2-point range in the spiders pretty much for the last 7 trading days, and we are literally just sitting here at the upper end of the range. Now, mind you, this is bullish. This is definitely bullish, holding in here. Yes, we are overbought. Volume is decent for what it was for the last month of July. So really can't say much about that. But again, guys, we need to break out, or we're going to literally start to roll back over again. And I think that a lot of these earnings, these bigger cap tech, the GE, that's going to really put some sort of either a continuation for this rally or a big rollover. So that's something that we're going to be watching here in the coming days. Take a look at the diamonds, which the Dow Jones ETF. As you can see here, same thing. Now, these two sectors, right, Dow Jones and the SP, have not taken out their highs yet. Now, intraday we did, but we're still back here. So we're still working on this double top formation yet. Again, has not triggered yet, but we got to continue to monitor and watch. Same thing with the transports. Transports, again, did not take out the high from the previous high, and now we're just looking at a double top formation here. And again, as you can see, the transports were lagging, played catch up in a big way, and now they're just sitting right here at the upper end of the range. Again, quite bullish. The longer term picture remains bullish, but in the short term, this is desperately due for a pullback. Desperately due for a pullback. And as you can see here, what do we've had? We've had really no pullbacks at all. You know, you get 3-4 days down, and then you have 13, 15, 16, 17 days up. That's just not really that healthy. But again, we're in this low volatility environment, and we are in the summer, so that is really to be expected. IWMs, again, holding up at its upper end of the range, but we're in this uptrend channel, still looking pretty constructive. Again, overbought in stochastics, MACDs, and the volume, it's okay. Nothing really to write home about. And the Goldman Sachs hanging in here as well, looking pretty good. I think we got this bullish symmetry back on track again from down here, and now we're just sitting here in this range-bound area. And now I'm looking for Goldman to really break out. If the market's going to break out, Goldman's going to break down. It's going to be a pretty good trade, at least for the banks are concerned. As you can see here, look at the XLF, which is the financial ETF, looking pretty good. And again, if you don't like Goldman, if you don't want to be trading Goldman, look for the strongest bank in that sector. Don't look to buy weak stuff. You want to buy strong stuff. You want to short weak stuff. And here is Apple, as you can see here. And I got to tell you, it's anyone's guess what Apple's going to report. I mean, we all know that. It really is just a guessing game. But usually the charts don't lie, and this does not look so great. I mean, I'm not looking to play it. I'm going to, if anything, I'll wait to play it after the announcement of Apple's earnings. But I would probably say, if I was guessing, that Apple's going to miss, and just the way this chart is. But again, that's just pure speculation, guys. Okay, but let's watch what Apple does today after the close. It's going to be very, very interesting. And we have the Qs. As you can see here, little weakness from tech. Netflix, as you know, came out last night, like I mentioned, and they sold off pretty hard. Google, Intel not doing too well. Microsoft not doing too well. So I tell you, that's not a good sign, especially when tech is starting to, when tech was strong and now starting to lag again. That's not what you want to see, especially for a continuation rally up. All right, guys, that's really about it. Sorry about the lack of information, but I don't want to sugarcoat anything when there's really not much to do. Take a step back. If you got some time, spend it with the kids. Go on vacation, because right now, I do think that things will be heating up, and it really could be any day. I mean, the forex markets have been so quiet, which tells me that there's going to be a bigger move to come, and that's where we want to be ready, right? You want to trade, we trade a little bit, and if we make money, you lose a little bit of money, not a big deal. But the really big focus will be on when the market does break out or break down. That's when you get aggressive, because you know exactly where the markets are at least headed in the short term. You know that you identified the trend, and now you look for either the weakest stocks when you're shorting or the strongest stocks when you're looking to buy on pullbacks. Okay, so keep that in mind. But let's keep an eye on today's earnings. That's going to give us a good clue on where this market will be headed in the next coming days and weeks. Have a great day, and we will speak to you tomorrow. Take care.